Welcome to A View from the Floor here at the New York Stock Exchange. I am joined by Peter Tuchman. They call him the Einstein of Wall Street. It's always great to see you. Markets continue to climb despite lingering risks here. What are investors seeing that potentially skeptics are not?
Well, look, I mean, that's a really a good question too, because you're wondering like where do people stand? Where is their comfort level? Where is their anxiety? And right now I think January's been sort of a curious month at best, right? I mean, I think all eyes for this week at least are going to be on the Fed meeting and earnings, right? That's what they're looking at. But my gut is look, we know that the Federal Reserve has set us set in motion an interest rate cutting cycle. Okay, and we do know that Mr. Trump is going to be installing a much more dovish new Fed chairman. Whether it's April or when it is, I'm not clear. And we do know that we are going to continue that cutting rate cycle. And historically, when you're in that mode, I mean, year over year, historic data tells us that in years where you've got these interest rate cutting cycles, that the market is up at least 16%. That's just one little tidbit. Otherwise, I think, look, we are, short, look, there's two sides of this because, we obviously know we're one tweet away from crazy town, right? And we've seen that, right? The last couple of weeks have been obviously, a perfect example of that because while the market was a little bit sort of sideways, roller coastery in the beginning of January, obviously we saw what Mr. You're making me think about it. So I'll tell you this little tidbit. Historically, I have a photographic memory. So in Trump 1.0 and Davos 1.0 with Mr. Trump, the first time he was there, he mentioned tariffs and China, and the market sold off 1,400 points at 11 o'clock on a Tuesday. By day's end, we were up 1,400 points, a 2,800 point reversal in the market. We should have learned by then that when Mr. Trump's tactics of negotiation are that he throws out a big swath and then he tends to pull it back, right? And so once again, we saw this happen this time, right? So out of nowhere, we decided, he went there, his Greenland agenda was sort of curious at best, that was after the Venezuela agenda, which is also curious at best. And so, going across the pond and into other people's playing field and getting so aggressive with them, obviously the market did not like, once again, tariffs and Europe. And so we sold off aggressively 1,000 points. Should we have known that it was going to, by day's end or the next day, that this would all be, there's nothing to see here type of scenario? We should have known, but we didn't. And a lot of people bailed on the market at that point because it was fear. The VIX were up big around that. And so obviously the next day we came up with some kind of a framework and we're beyond that now. So look, my gut is that where else can one put their money? Like there are a couple places, right? Obviously people are putting their money in gold and silver. I mean, that is, normally that's a hedge to the market.
Well, that's my next question. Gold and silver are trading at nearly big highs right now.
At record highs, above 5,000, and then obviously above $100 in silver, which at 2 weeks ago it blowing up to 82 and then 90, and now over 100 is incredible.
What is driving that move?
You know what? Look, my gut is that people are living in this mode. They want immediate gratification. They want quick return on their investment, and that's where they're getting it. They're not getting it in Bitcoin. They're not getting it in digital assets at the moment because that's just skittish at best, right? I don't know whether that's to do with a Japanese carry trade or whether there's large margin calls around other things or whatnot. But obviously that is the one thing. Think about it. 2025, the Dow is up 14%, S&P up 16%, NASDAQ up 19%, silver and gold up triple digits. And the only things that were down were oil and Bitcoin. And so people are putting their money where they're going to get a quick return. And so I think people have this, it is a bit of an irrational confidence around the markets, but they're getting their returns. I think also it's important to note is that the retail investor and retail trader are now a real viable part of this market, right? They came along during COVID when there was that initial democratization of the trading community. They got their, excuse my language, butts beat a lot by the meme phenomenon and all of that stuff, but they came back strong and they are now smart money. I mean, I kind of analyze what retail traders are doing, partly through, my Trading Academy, where we speak to a lot of, which we'll talk about, but where we speak to a lot of young traders. But it turns out that during February, March, and April, when the market was selling off and it looked scary, retail was buying it. In November, when the market sold off and it looked scary, retail was buying it. So you have this whole new tranche of young retail investors who have a little bit of a really keen eye on the where the markets are going, and I think they're the ones who are buying.
Speaking of where the markets are going, you mentioned this before. We're one tweet away from something happening. Geopolitical headlines continue to just flood everywhere you read the papers or everywhere you turn. Where do you see investors looking at this? Is there one geopolitical headline that you think could really turn heads and could have them thinking?
Yes, I mean, look. I think it's this. The level of potential confrontation that Mr. Trump is capable of, right? Look, we I don't know how close we were to some kind of a, at least in dialogue, we were talking about an attack on Greenland. We did make, whether it was an attack or whether it was an extrication or whatever Venezuela was. I mean, our forces were set on high alert. And I think that's something that people are scared of, right? War, while it can be a catalyst to a stronger market in some ways, it can also be a lot of anxiety in the marketplace. To be honest, I think the most significant thing is when anything geopolitical catalyzes a tariff scenario, that is the perfect storm that the markets cannot handle, or at least they can't handle temporarily. And we've seen that. Whenever you're talking about something geopolitical or geoglobal and you're talking about a tariff as an end result of that confrontation, the markets react in a huge way, and we saw that the other day when Mr. Trump went out and said, if you're not going to go along with my Greenland scenario, I'm going to tax you 10% and as much as 25%. I mean, I guess he's now going after Canada for 100%. So those are the scenarios. It's been made clear to us that the tariff. The breaking news about tariffs is one of the things that is the Achilles heel of this market.
You mentioned earlier about the Fed. Obviously, they're making their first Fed decision of 2026 this week. What will investors look for? How will this impact investors?
Okay, so, we have been trading in the dark for a while now, right? Ever since the government shut down, right? We're still not clear about a lot of the data from October, November, December, and it's trickling out for us. We obviously now have another looming government shutdown, which is going to once again cause, a interruption in a lot of the data that is the key data that is the metric that the Federal Reserve uses to make its decision about cutting interest rates. So without that, you're literally driving, you're driving with dark sunglasses on. And so I think that, that's once again is the Achilles heel of this market, is because we don't know what they know. We don't know a lot of the things that are really, look, the Federal Reserve, while the president tends to play a little bit of a bully around what he thinks the Federal Reserve should do, they've been very clear that they need to maintain their independence, and their decisions are economically based data decisions, and it's based on CPI, PPI, and all of that, and inflation data and all that stuff. And if we don't have that data, how do they really make their decisions? So I think, it's curious that in 2026 that we still, I found out recently when this whole thing went on, is that actually a lot of the information that they get is being done by surveys, right? When you would think, like in the years of AI and all that stuff, we're not getting economic data in any other way than sending out snail mail to 600 people and coming back with stuff. I found that a little bit curious. But all that being said, I think the Federal Reserve is it's clear that we don't have any probability of them cutting or raising. Obviously, it feels like we're going to be staying stagnant. Although I did see a thing yesterday that there's that apparently there's some trade happening now. There's some correlation. I don't know whether it's dollar yen or something, or risk yen. I don't remember what it was, that sets the scenario for where the Fed is being put up against the wall to make some kind of a decision, and or at least give us. Look, I don't think they're going to come up with a number, but I think obviously the news conference is the most important thing for your audience to watch. Is basically what we always talk about. Me and my partner David Green talk about is sitting on your hands, during the news conference, which happens at 2:30 on Fed Day, because everybody hangs on every word that Mr. Powell says, and that's where you see that volatility happen. And so I have no idea what they're going to do on Wednesday. I don't think anybody does. We don't. I'm sure they're not going to be any kind of a change in the number, but it's a matter of how do they posture themselves going forward.
Never a dull day here on the floor, especially with you.
Fantastic.
Well, thank you so much for joining us.
My pleasure. Always a pleasure. Happy trading.
And that'll do it for us here on Asset TV. Peter Tuchman, Michelle Yu, thanks for watching. We'll see you next time here on Asset TV.